Welcome to HDFC Securities 5-minute market wrap-up, the week ended 5th April 2024. In key macroeconomic news, India's GST collections for the month of March were the second highest ever and were up 11.5% year-on-year. In the US, non-farm payrolls grew 303,000 in March, well ahead of estimates of 200,000 jobs. The US unemployment rate fell to 3.8% from 3.9% a month ago. China's Caixin manufacturing PMI rose to 51.1, ahead of forecasts of 51.0 for March 2024. In the Eurozone, inflation fell to 2.4% year-on-year compared to expectations of 2.6% and lower than 2.6% reported in February. In markets, Nifty inched up to close higher by 0.9% during the week. But all the action was in the broader markets as the BSE Small Cap Index ended up 6.6% higher for the week and the BSE Mid Cap Index ended up 3.8% higher during the week. In select sectoral gainers, Nifty Media and Nifty Metals rose the highest, whereas BSE Power, Nifty PSU Bank and Nifty Realty continued the momentum, gaining by more than 4%. There were no sectoral losers during the week. In select market movers during the week, shares of PNB Housing rallied by 23% after ICRA and CARE upgraded the credit rating by one notch to AA+. Shares of Sterlite Technologies rallied by 16% on expansion of a partnership with Australia's Vocus Group. Cochin Shipyard shares gave a clear technical breakout and the shares rallied by 24% during the week. In select losers, shares of Hero MotoCorp were down 4% during the week after the company received a tax demand notice from Income Tax Department for Rs 605 crores. FIIs continued to be net sellers, selling about Rs 3,800 crores of equities in cash during the week. DIIs were surprising net sellers of Rs 3,370 crores on Friday, the 5th of April, which pulled down the weekly net flows to nil. The S&P 500 witnessed profit booking and ended the week lower by 0.95%. Nasdaq Composite, on the other hand, was up by 1.9%. In this section, we discuss select reports published by the research teams of HDFC Securities. You can access these reports on our website. Our institutional equities team published a results preview report on the IT sector. The slowdown in macro is still the baseline scenario with lower discretionary spending and slower conversion from TCV to revenue. We expect Infosys to guide constant currency revenue growth of 3 to 5% for FY25. Within the sector, we prefer TCS within Tier 1 companies and Persistent Systems from the mid-tier IT space. In the chemicals sector, our analyst sees opportunities galore for Indian CDMO players. There has been a notable uptick in inquiries from Japan, while challenges in Europe are expected to drive business toward India due to its cost advantage. The China Plus One strategy adopted by MNCs in CDMO and CRAMS supports this opportunity. The inventory overhang in the system due to Chinese dumping is expected to last for at least another 2 quarters. Neogen Chemicals and Navin Fluorine are two of the stocks which are rated by our institutional research team. Our retail research team published a note on eClerx Services, which is one of India's leading process management and data analytics companies. The company reported revenue growth of 8.8%, 38.1%, and 22.6% in FY21, 22, and 23. Our analyst expects a revenue growth of 9.6% and 11.7% in FY25 and FY26 respectively. Stock is currently trading 16.9 times FY26 EPS. We have a base case fair value of Rs 2,685 per share. That is all for this week. Do refer to the detailed disclaimer on your screens. The securities discussed in the presentation are for information and educational purpose only. Thank you.